Now we're aiming to create that fully classified liabilities and equity section of a balance sheet. So that was question number 1 there. Question number 2. Balance sheet extract for Prospector Limited. As at the 30th of the 6th, 2016. Now we're doing the liabilities section, so I'm going to put current liabilities. So my current liabilities are now, let's have a look. Accounts payable. So I've got my accounts payable. Accounts payable is 22,500. Accounts receivable is an asset, so I don't need to worry about that. Accumulated depreciation is an asset, I don't have to worry about that. Cash at bank's an asset. I've got a dividend payable. My dividend payable was 100,000. Non-current asset, which was my equipment. General reserves, I'll get to that. Inventory is a current asset. We've got current liability and non-current liability, so I've got 20,000 here as loan. My loan is 20,000. And so I can tick that little bit off. I'll tick off that current liability. Prepayments. Prepayments are not a current liability. That is a mistake. Prepayments is a current asset. What was I thinking? Provision for doubtful debts is an asset. Non-current liability, equity, current liability, revenue received in advance. Revenue received in advance. How much is my revenue? It's 12,000. So how much does that all come back to? 12, 32, 132, 152, 154, 500. 154, 500. Non-current liabilities. My non-current liabilities, back to the top of my list, I've got tick, 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 tick. That's equity, equity. Non-current liability, I've got a bank loan of 150,000. 150. So I can tick off that. Where's that bank loan gone? There it is. Bank loan and provision for long service leave of 12,000. For long service leave, 12,000. Gives me 162,000. That's total liabilities. My total liabilities comes to, what's that? 162, 116, 216, 316, 500. 316, 500. Next section is my equity. Now my equity starts with capital. So my capital my share capital is 250,000. Now we'll go back to the start of the list. I can see my general reserves in here of 71,000. Reserves, 71,000. My interim dividend of 95,000, and that's a reduction to equity. So I'm going to bracket that figure. And retained earnings. Now my retained earnings was 213,750. 213,750. So now I just need to add that up. Let's clear that out. Let's see, can you see it now? Yep. 250,123 plus 71,000 minus 95,000 plus 213,750. That equals 439,750. So that takes care of number 2. And number 3. Using the conceptual framework criteria, explain why you've classified provision for accounts payable. That shouldn't say provision. Oops, that's an error. Accounts payable in the way you have. Now, accounts payable we classified as a current liability. Now, when we talk about conceptual framework, we're talking about definition and recognition. Now, the definition of a liability, so let's have a look at number 3 here. We have a current obligation. We have a past event. We have an outflow of economic benefit. It's probable we're going to have an outflow, and we can measure reliably. Now, when you're doing this one, this is what you need to be able to tell me. How does this accounts payable up here, oops, then we'll slide it in. How does that accounts payable fit this definition? What's the current obligation? Okay, so we owe the supplier for goods purchased. So that's the current obligation. What's the past event? Was the purchase of inventory. Is there going to be an outflow of economic benefit? Yeah, need to pay cash. For the inventory. Is it probable that we're going to pay for this, or is it probable that there's going to be an outflow? Yes, as we have the inventory. So it's only when we have the inventory will we pay for it. And can we measure reliably? Yeah, well, that's transaction value. So now you've ticked off each one of those criteria, and there was 2.5 marks there. So there's your 2.5 marks. Now you're probably wondering where the other marks are. This first 2 marks is 1, 2, and then we've got 3.5 marks here, and that comes out. Now what are you getting here? You're getting a quarter of a mark for every one of these. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So that's 14 marks, which divided by 4 will give you 3.5. Slide that up again.